Introduction to money laundering. Money laundering has traditionally been considered to be a process by which criminals attempt to hide the origins and ownership of the proceeds of their criminal activities. This term can be categorized as turning dirty money into clean money, washing drug money, disguising criminal money. These historical descriptions are fine as far as they go, but the actual term money laundering is itself a misnomer. It does not recognize that in the modern world undertaking a laundering operation does not have to involve actual money. Consequently, a modern definition would be that money laundering occurs every time any transaction takes place or relationship is formed which involves any form of property or benefit, whether it is tangible or intangible, which is derived from criminal activity. One must also not overlook the fact that you do not have actually to move the criminal proceeds to launder them. This is an aspect that can leave financial institutions, particularly banks, in a vulnerable position. The classic example would be in the case of tax evasion. Money earned for a legitimate activity is placed directly into a bank account in another country. However, if the account holder fails to declare this income on a tax return in the country in which it was earned, the funds then become the proceeds of crime and the bank, although it may be unaware of it, is laundering the funds. Another traditional view of why money laundering is undertaken is that the criminal's objectives are the avoidance of detection, prosecution and confiscation of their ill-gotten gains. Some cases demonstrate that criminals' primary objective is not the conversion of the property but the need to disguise the fact that they own the property. In doing so, they break the connection between themselves and any property that can otherwise link those to the criminal offense for which they are seeking to avoid detection. In other words, money laundering is, therefore, as much about disguising the ownership of property as it is about converting or washing criminal property. This clearly shows that even in a relationship where there is no obvious process by which money is received or paid away, money laundering can still occur.